Instead of being caught in a negative loop, seeing bad returns, feeling terrible, and making rash decisions, you become someone who can calmly assess their situation, pinpoint root causes, and implement improvements. You gain confidence, you become more disciplined, and you make better moves. Over time, this can significantly enhance your returns, reduce stress, and help you live a more balanced life, both financially and emotionally. Instead of expecting to beat the market every month or every quarter, he acknowledges that beating a broader index is challenging and typically requires a multi year horizon. He shifts his time frame from months to years. Now, when he sees a dip, he doesn't panic. He recognizes investing as a marathon, not a sprint. This reframing eases his frustration, clears his head, and prevents rash decisions. Consider James, a 42-year-old project manager making a comfortable income, but too busy to follow stocks daily. He kept picking stocks on gut feelings and ends up repeatedly disappointed. He's frustrated that he's always behind the S&P 500. This time, instead of acting emotionally, James adopts a practical strategy, creating a quarterly portfolio review checklist. Every 3 months, he dedicates one Saturday morning to reviewing company fundamentals, assessing whether his investment align with his criteria, and comparing long-term performance. Having a system reduces a knee-jerk reactions. When frustration flares up, like discovering a stock he chose underperformed, he follows the checklist and makes methodical decisions rather than emotional ones. Over time, this systematic approach improves his choices and lowers his stress. Imagine Carlos, a 50-year-old engineer who's always busy and hates that he's not beating the S&P 500. Every time he sees red in his portfolio, he wants to click sell immediately. The frustration builds up and he's on the verge of giving up on individual stocks altogether. But Carlos tries a psychological strategy, mindfulness. Before making any trading decision, he takes a 5 minute break, breathes deeply, and notices his emotions. He acknowledges the frustration without judgment. This tiny pause helps him separate the feeling from the action. He still might sell, but now he does so after thinking clearly, not just reacting emotionally.